Hello traders, Sid here with another weekly watch list video. And as you guys know, the market is very wild right now, and I have not seen such a bloodbath since I started trading in 2019. It's a wild ride. Everything is nosediving and there is no clear indication of slowing it down. Thus far, market has had 7 consecutive red days, and if you go back in history, that this type of scenario rarely happened. It happened back in 2002 or somewhere near that, and even though at that point it was not consecutive, it was like 3 red weeks followed by a green week, then again followed by the 3 weeks, and then continuation towards the upside. So it's looking pretty bad. Now, looking at the current state of the market, it's clear that it's going to get ugly before getting better. So in conclusion, market is tough, and traders should be careful with all their trades. Now, before starting into this week's watch list, let's take a look at what happened in the market so far. Starting with the Nasdaq, it's in a steep downturn, and I'm expecting it to go down even further towards 11,600. Okay, right, today is a Friday and market is still open. We are already at that level. Now here what we need to see if it holds that level or not. If it holds, then it might see a short bull run push towards 1300, because this is a 0.618 on the fib level is very important. And if you consider all this selling and if you measure it from its top to the bottom, then this level is very insignificant compared to all this sell-off, and it can easily, if market decide to bounce, then we can quickly see this level. There is no doubt about that. At that level, like let's say if we get a bounce and if we reach to this 13,000 level, then we need to watch like whether it can break up or it can consolidate over there and come down again, making another low. Moving on to S&P 500 or ES, it's a similar situation like a Nasdaq, and I want to see if it can hold 3800 level. Right now we are approaching to that level as market is still open. If not, then the next step to watch for will be 3500, right around here at this level, where we can get some kind of like a support. And if this happen, like let's say if we drop to 3500 and if we get a bounce or some short bull rally from that point, then we can see that it can retrace back to around 4000. That would be the max, and at that level we need to watch if it can break or not. If it couldn't break, then we will come down again, retest this 3500 level. If market condition remains bad at that time, then we will break even further, and probably we will start racing towards the COVID low. That's a worst case scenario, but market can be irrational at the greater length of the time, so you never know. Right now, currently at this point, like let's say we bounce back from this 3800 level, then we can quickly see a touchdown towards 4150, which is a 0.618 retracement of this entire move. And I'm being reasonable over here, I'm not exaggerating, but if we get some kind of like a bounce back or the dead cat bounce rally, then just keep an eye on this level. Moving on to VIX measures the market volatility, and it's forming some form of a triangle pattern that might go in either direction. Okay, it might consolidate over there instead of picking up the direction. That's entirely possible. So it would be better if we wait and watch how everything unravels itself, whether volatility wants to shoot up or come down. Now let's start with our watch list. The first stock in my watch list is ABBV. ABBV reached at around like 175 at its top, and from that point it started pulling back, and now it is having this nice rising wedge formation. And if you take a fib retracement tool and if you measure this entire move, you guys can see here where we are consolidating, or like where exactly it bounced back to its 0.382 level. Now rising wedge is a bearish sign, and I can see that it can come down even further towards 0.618132 level, and that would be a reasonable retracement back. So if it comes to this level, 132 level, we expect a bounce back to 148 before coming down even further. And as you guys can see here, stochastic clearly indicates that it is still in down trade. Moving on to Chipotle holds up relatively nicely compared to the rest of the market, but it is forming this massive head and shoulder. Now this is the left shoulder, head and right shoulder is well defined, but not the left shoulder, but you guys can get the picture. And I use the fib retracement tool from its low to its high, and we are in this zone. Now the only thing that we need to watch for is whether it can crack this level, 1250 level. If it can crack that level, then we can quickly see 1180 or 1175 level, where it bounced multiple times, like couple of times previously. So this area will be support zone, and if we crack below that, then $1,000 level is not that far off. Okay, moving on to Costco. Now the Costco got annihilated after bad earnings and guidance, and it's highly possible that it might retrace to 375 level. Okay, this level, because this is the level where it has good amount of support, and because this level acted as a resistance previously, so resistance turning into support. Also, if you see this fib retracement, we already cracked through this 0.382 level, 0.618 level is also cracked. So what's the next level to watch for? 0.786. And if you see where that level rests, exactly at the support, so I would not be surprised if it comes down to this level, 376 level. Next one is John Deere. Now John Deere has a megaphone formation, and the 324 level is interesting as we bounce from that level 3 times so far from that level. So that's not a fresh demand zone, as you guys can see here, because market is right now live. We cracked through that level. We also barely cracked through this 0.382, that is 316 level. Now we need to watch if it can get a bounce from this level or not. If not, then we can quickly come down to 236 level. Moving on to Dick's Sporting Goods. This one is another falling knife. Look for the break of the $70 level. Okay, if we can break that level, which is right over here, it can quickly come back down to 64.62, which is a 0.618 level, and at that level we have a little bit of support, so consider it can make that move pretty quickly. At this point, 0.618 level is the level to watch for. Next one is Dollar Tree. Now the beautiful bear chart. Okay, the sharp drop followed by the gap fill right over here, and remember this is on the weekly chart, so consider the significance of it. You need to watch for the level 122 to break. If we can break that level, which is right around here, then it can quickly fill this gap before making any further move. Also, importance of the fib retracement, where this level sits right in the middle of this gap fill. FedEx is very interesting. It's also making lower lows, has this gap to fill, crack down 0.382 level, heading towards 0.618 or 176 level. Now what you need to watch, we are right now at the support zone, so if we crack this support, then we can quickly fill this gap coming down towards 174 175 level. I think FedEx will consolidate here a little bit, so it might take some time, probably a week or so, to crack down 190 level coming down towards 176, so keep an eye on that one. Next one is Fortnite. So we have this like a massive inverse cup formation over here. We touch down to 0.382 level, bounce back up from there towards 283. Now what we need to watch for is whether it can get a continuation towards 300. If it couldn't get the continuation, if it comes down to this level, then again we need to watch for, because we tested this level like 1, 2, 3 times, so that this demand zone will be a weaker if it reverses back and retest this level again. If it breaks that level, then make sure that it can come back down to 203. That will be like 100-point drop. Goldman Sachs, another one with inverse cup formation, falling wedge formation, cracked through this 0.382 level, heading towards 276. So what you need to watch for is whether it can break this $300 level. I guess it will take some time for it to crack this level. Right now we are retesting this support, so this demand zone is fresh. It might take some time for it to crack down to 278 level. Wells Fargo also has somewhat similar to Goldman Sachs, and it already cracked this 0.382 level. I'm looking for this level 36 level to retest. Right now it's at 41.58. I want it to crack below 40 to get some validation towards this move, towards 36 move. And the last but not least is a Walmart. What a disaster. I was not expecting Walmart to drop from 150 to 119 in just a single week. Remember, this candle is a single week candle, so this drop was massive. Right now we are hovering near that support zone. Okay, so we barely cracked through it. I guess we will hover over here for a while. Maybe we will make a rising wedge, bearish rising wedge, and then retest again, break this level 120 level and come back down to 100 level. So level to watch for is clearly 105 or $100 level. So that's it for this watch list video. Another watch list video wrapped up. Please be careful with your trades, and if you're using a dollar cost averaging to accumulate good value stocks like Microsoft or Apple for a long term, please be patient. Let that stock reach to a particular level, consolidate it for a while, or hold that level for a while. Don't be impatient and jump into the trade considering, okay, that's a very good price, that's a low price, it cannot go further. Don't be in that assumption. Let market tell you when it wants to reverse. Right now it's not a good place to buy stocks, even though all the good companies are at massive discount. Be smart and invest smart. So that's it for this video, guys. I will wrap up this video over here. Thanks for watching and see you in next week. Bye.